Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex.
Chicago soybeans. 12 weeks ago, I said, and I quote, "The only other thing to bear in mind is not here on this daily chart, but in Chicago soybean meal." And that is the well-highlighted annual key reversal down we saw there for 2023. Not directly related here, but not worth ignoring either. End of quote. Part of the recent action has seen the market create a possible double bottom over February to May, which may be moving towards a triple bottom if you look at it and include June's actions. However, another pattern that had taken the recent supremacy in market actions, though this is now also being challenged, is or was a late February to late April mildly bullish shift pitchfork, highlighted in dark blue on my daily chart. This was a much better fit for the recent action. However, the market this week has exited down through the lower time, currently 1167. This brings me to another point I made 3 weeks ago, and I quote, "And that is how the action throughout May is now on the verge of becoming a double top Adam and Eve type." It's not a done deal, but we are close, and I would look to this idea should we see strong consecutive closes below in the very immediate future, below both the short medium moving average, that's currently 1194, and the medium moving average, currently 1191. We're not there yet, but a primary move lower would be about 28 cents, and the secondary harder to reach move would be about 52 cents once we have confirmed the move below $12. One additional point, and that is that sometimes double tops such as this one appear after a large decline and can indicate the end of that decline soon. So just be aware. It doesn't happen always, but it does happen enough times to be noticeable. End of quote. Well, these potential moves lower have come true with a primary target at 1175 and a secondary hard to reach target X down in the 1151 zone. The primary target was achieved 2 weeks ago and the secondary target was reached last week. The next feature is one I drew and spoke about 2 weeks ago, and I quote, "I've drawn a new small recent bright red highlighted bearish Andrews pitchfork for the action during May. It is a nascent pitchfork, but I have decided to place it in anticipation of a possible move lower. The market is right now just below the middle time overhead, currently 1160, and the lower time below, currently 1123. This is a new pattern and I am not wedded to it and could easily finesse it into a bearish shift pitchfork or retire it altogether." End of quote. Well, I have not had to do anything to this pattern, not at all, as it is still working as a bearish Andrews pitchfork and showing the bearish angle of attack of this market. Looking below now, well, we'd have to obviously look at the late February lows at 1133 and 1128, but we really only have the 61.8% absolute Fibonacci line in the way before we test down to the November 2020 low at 1045. Chicago soybean meal. The market consolidated in late February this year, down at 326.90. But this congestion was different compared to earlier ones, as we had crossing through it back then the dark blue highlighted extension to the lower trend line, currently at 325.10, of the July to September 2021 descending triangle. I said 14 weeks ago, and I quote, "This may be nothing, but I'm minded after such a fall as we've seen last year, that this may, just may, see some hesitation around the 327, 325 zone. I'm not certain on that, but it's worth considering." End of quote. Well, prices utilized this blue highlighted extension to the descending triangle as a base and rallied back up, creating a very early February, early May sideways triangle. We advanced quite a way along the coil of this triangle until breaking on the upside in late April. Prices swiftly reached the primary target and soon after the harder to reach secondary target. However, once all the work was done on the way up from the sideways triangle, the market started to waver, notably being capped in early May by a combination of the declining long moving average, currently 373.80, and especially by the 50% Fibonacci line of the August 2020 to March 22 move at 390 even. Prices backed off down to the nearest congestion area between 363.70 to 368.80, that zone there. And we stayed between this congestion below and the gold long moving average overhead. Well, it's not gold anymore, but it's not highlighted anymore, but it's still there, forming a small double top over May. Until about 3 weeks ago, when prices finally fell away with an immediate countering weekly key reversal down. This left the primary target below for the double top at 352.40 and a secondary harder to reach target X down at 343.30. The primary target was reached 2 weeks ago, but target X is still alive. There are some other features I'd like to discuss. Firstly, it is the green highlighted short medium moving average, currently at 356.30. This had been support, but now this week has become overhead resistance. However, I suppose there is a key level just below with congestion at 349.20, combining right now with the flatlining mauve highlighted medium moving average, currently 348.80. The second feature is the bright red highlighted May-based bearish Andrews picture, which I drew 2 weeks ago. You may remember I only drew this picture with help in showing the channeling lower of the market, and I was happy to finesse it or retire it as necessary. But the market has taken on board this bearish pitchfork, and the market is now just above the middle tine, currently at 347.60 and looking like it's going to make a daily key reversal down with a low not seen since, well, early May. At the moment, this bearish pitchfork is really showing the bearish angle of attack of the immediate market. Finally, I'll raise once again a key point here I raised 51 weeks ago, and on every occasion since it came to fruition, the close of 2023. Was how the whole of 2023 was an annual key reversal down in Chicago soybean meal last year. This feature, this potential if you like, hangs over all of this market more than anything right now, and all actions should be seen in the shadow of this pattern. Chicago soybean oil. The market has drifted sideways to lower this year, consisting of a 3, possibly 4 bands. They are 44.68 to 45.04, made up of the 2014 high at 45.04 and the May 23 low at 44.68. Then there's that tight 43.80 to 43.94 zone, made up of the 50% absolute Fibonacci line at 43.80 and the April 2014 high at 43.94. Then there's the interesting 42.65 congestion with the nearby neckline highlighted in bright red of the October 2019 to February 2020 head and shoulders top at 43.95. I mention all these because some 49 weeks ago and numerous times since, I said the following about a big descending wedge pattern that was on my daily chart back then and is now high up off the top of my chart. I said the following, and I quote, "I would consider this descending wedge pattern may, just may, have lately morphed into a possible scallop pattern." End of quote. Now this is a big pattern idea, and the market decline since autumn of last year fitted in with this, with the expectations I voiced of eventually witnessing a fall down to the area of the May and June lows between 48 even to 46 even, which is where we've been until recently. Now, I've often stated here that I am keeping a very, very close eye on this idea, as any significant breakdown below the 48 even to 46 even zone could signal the start of the rest of this move lower. We haven't had it yet, but I'm keeping an eye on it. I said 14 weeks ago, and I quote, "So far I'm not convinced of the move, that we've seen this break lower already. No, not just yet. However, 3 things to bear in mind. Firstly, this is a really big pattern stretching from November 2022 to date, so do not expect any immediate sharp movement. Secondly, data indicates about 3 out of 4 times the market breaks lower. Just be aware of that. Finally, I would like to float the idea of a recent unusual bear channel." End of quote. Now, the bear channel is highlighted dating from the start of 2024 in dark blue on my daily chart, and it's currently 38.69 to 45.47. Mixed in with this, near the upper bare channel line, is the green highlighted short medium moving average, and that's currently at 45.09. I had used this moving average as a proxy for the upper bare channel line at the start, before I drew a proper upper trend line. Now we have seen back in March, April, and a little in late May, an attempts to edge out of the top side of the bare channel, but so far these attempts have been unsuccessful. Right now, for the last 2 weeks or so, we have been playing around just underneath the dark blue upper bare channel line and the green short medium moving average, and the mauve highlighted and slowly declining medium moving average, currently at 46 even. At the same time, we are sitting right now on top of the congestion between 43.80 to 43.94, as well as the bright red highlighted neckline, currently at 43.95, of the October 2019 to February 2020 head and shoulders top. 3 weeks ago, I also drew a pink highlighted late November 2023 to mid-March this year bearish shift pitch hawk on my daily chart. I commentated on this at the time, and I quote, "I'm looking to this to possibly act as a form of bearish channel," end of quote. Well, so far prices have neither really justified this idea nor countered them either. And the market's at this moment in between the middle tie and below, currently at 44.02, and the upper tie and above, currently at 47.56. All this added up to my saying 2 weeks ago how, and I quote, "What I do realize now is this chart is becoming increasingly messy and too colorful in too small an area, especially as prices start testing the bright red neckline once more and come close to the congestion of 42.65 that held up the market in early May," end of quote. Nothing since has changed my mind other than the topside pressure has moved a little closer to the market despite this week's rise.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.